Right, huge week ahead. We've got the FOMC announcement on Wednesday. We've got the Bank of England as well. We've got the RBA. We've got loads of data, including the release today from Chinese official PMIs. Um, we're going to have the RBA on Tuesday, FOMC Wednesday, Bank of England Thursday. Friday, we've got the RBA's statement of monetary policy, and we're also going to have the US and Canadian jobs reports. So, massive week, and we're at really critical levels. If we look today, in particular, at the US dollar and gold, here's the gold price. We've got this M formation within a inverse head and shoulders. So if I just pull that M formation up for you, let's get rid of some of this stuff. So with this left hand shoulder, head, right hand shoulder, failed to break above 75 over here, the tip of the shoulder, the neckline. And we've been forced back into this trading range of last week. Okay. So there's a neutral bias while within here. Now, on a break of 75, we've then got 88. Now, if you look closely at this here, the price managed to get on the front side, the back side of this trend line. Um, this was the last lower high um, before the lowest low. So we've got this potential double bottom here. We've got this break of trend, micro trend. We failed at the broader trend line over here, and we've been forced back into the range, but we're still outside of this here. So if we can get up beyond this very important structure of 88 and on the back side of this trend, then there are going to be significant prospects for a meaningful correction of all of this. Um, Now, obviously, this all depends on the US dollar and the Fed. So, this meeting this week, the Fed are going to be expected to hike rates by 75 basis points, but it could be a pivotal meeting. There's been a lot of speculation of late that the Fed are about to pivot. Um, the However, the data, I mean, of recent times, so the growth report and inflation, none of it is pointing to um, anything outside of continued rate hikes. But for instance, we've got Fed's Daly, who gave some remarks last week calling for the need to step down the pace of tightening. Um, and officials are being more and more eager to calibrate their rate setting to reduce the risk of over tightening. Um, Now, what that signifies is that there could be the possibility of a half point increase in December while using their new economic projections in December to show that they might lift rates somewhat higher in 23 than they projected last month. So, in doing so, that would sort of be a halfway mark to trying to signify to the markets that yes, they are um, fully aware of the implications of continued rate hikes versus the headwinds of inflation in terms of growth, but they're not going to completely bail out from tightening conditions. So it's sort of feeding the market a bone, but not leaving any meat on it. So um, time will tell how things will pan out this week in that respect. But I mean, it's pretty clear here the structure of gold. Then we've talked about that. If we move over to the US dollar, um, and if you want further insights, I mean, I've posted an article at FX Street, chart of the week in the analysis section. It's make or break time, which it really is. If we look at this dollar, you've got a scenario where it is clinging on for dear life at the moment. So you've got the trend line here. It's come in to test it. This is the daily chart, and bulls really do need to commit at this point. It's already corrected to a, let's have a look. Is it a 50% reversion? It's already done pretty much. That's a pretty strong correction here, Thursdays. So I'd anticipate a bit more upside, if not a complete blow off to the upside, and and homing in on 113. But we've got to get above 112, and that may come on the back of the outcome of this week. So we've got the non-farm payrolls at the end of the week to sort of solidify whatever might be suggested in terms of the economy uh, at the Fed meeting. So we'll see how this pans out. On the weekly chart, you've got this M formation. So we'll have to see how we get on. Um, this M formation is a reversion pattern. I'd like to see a bit more downside though before the move up, but because otherwise it leaves too much risk on the table for a move lower. So we could see this start to correct, only to come into the neckline and completely fall away again. What I'd rather see is a move deeper now and then the move up. Um, and in doing so, we will be breaking the trend line. We've had what, one, two, three, breaking the trend line on a fourth test of it, and then potentially move up for then further downside on the back end of the trend line. But at the moment, it's while within the trend line, it's up, 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 and up. Um, but it will very much depend on a break of 112 this week. And I've just switched over here to the 10-year yield US Treasury. So again, we've got this M formation that's turned up on the chart, daily chart this is, and we'd expect to see a move into the neckline um, if the price can hold on to here. So a move into the neckline, and we'll just see how things play out from there. If we get a break below here, then that's going to be troublesome for the dollar, beneficial for gold, and so forth. So we'll leave it there. A short video then, pre-open on gold, dollar, and US yields with a very quick insight to the key events for the week ahead. There'll be more to come with regards to Forex, potentially later today, probably sometime in the Tokyo session, if not before the US opens tomorrow. Have a good week.